Hey friends, I hope you have a wonderful Christmas. In today's video, I'm going to give a portfolio update specifically on the shares that I bought in the past 3 weeks. Let's dive in. As you can see on the screen, I have bought 4 shares of Alibaba and 8 shares of Facebook. And in this video, I'm going to give an overview on these 2 companies and the reason why I bought them. If you are new to the channel and you want to know more about the previous portfolio update, please watch episode 5, link in the description. Let's jump into Facebook first. I think Facebook is not a company that needs introduction. It is a dominant company in the social network space. The slide that I'm showing here shows the top apps worldwide by downloads, which is for non-game sector. Out of the top 10 most downloaded apps, there are 4 companies that are controlled by Facebook, namely WhatsApp, Facebook, Instagram, and Messenger app. This shows that they are very dominant in the social network space and control most of the traffic. And if we look at the revenue of the internet advertising market shares, you can see that there's basically a duopoly situation. Google is at the first place, about 31% of the revenues, and Facebook is 20% of total market share. So if we look at the revenue trend for Facebook, it is increasing steadily over time. And the growth rate is quite decent as well. You see the green bar at the bottom, the year-on-year growth rate was as high as 50% from 2014 to 2018. But in the recent few years, the growth rate has slowed down a bit, but still at about 20%. And Facebook is a profitable business, and the net income is growing from year to year. Next reason that I'm very interested to own more Facebook shares is because the valuation is quite reasonable. You see, these are the big tech companies. We shouldn't expect a very low valuations. But for Facebook, the trailing PE, which is the price divided by the last 12 months earning, is about 31, and the forward PE, which is the price divided by the expected earning next year, is only at 25. To me, this is a very attractive price earning multiple. The next reason to own Facebook is that it is a very innovative company. And the tweet by Ryan Mac, which I shared in the Telegram group before, it says that, quote, "New folks are not going to love this. Some product manager announced internally a tool that Facebook is developing called TLDR. Basically, it will use AI to summarize long-term articles and speed up bullet points so people don't have to read the full piece. What could go wrong?" So these are very interesting R&D that Facebook is working on. You know, people are lazy. When you look at a very long article, sometimes we just lazy to read about it. But if we have a very useful AI tool that can actually read the article on behalf of you and try to summarize the key important points, this will make people stick to their platform. Besides that, Facebook TLDR will apparently also be offering audio narrations of full articles and a voice assistant to ask contextual questions about a piece. For example, you could ask, "Hey Facebook, how many people will this vaccine help?" And it will supposedly would spit out an answer. And another reason that I like this kind of R&D because these innovations only work in terms of the software codes. So unlike companies like Tesla, which still require to build plants and build manufacturing in order to ramp up their production, for a company like Facebook, they only need to come up with the software or upgrades, and it can roll out very quickly to all the users around the world. So I have provided a couple of reasons why I like this company and still planning to add more shares in my portfolio. But let's not just talk about all the pros. Let's also talk about the risk of investing in Facebook. First point that I would like to talk about is definitely antitrust issue. So in this CNBC article, it says that FTC and states sue Facebook could force it to divest Instagram and WhatsApp. So basically, US government has filed antitrust lawsuit against Facebook. And the worst case is, of course, the company has to be broken up. However, in my opinion, this is very unlikely because the current antitrust law is not very effective to work against big tech companies. So they might have to change the antitrust regulations in order to impose a stronger antitrust regulations. However, changes of regulations would require the support from Congress, which is not easy to get past. Next risk that I would like to talk about is personal data protection. And the CNBC article that I show on the screen here says that, quote, "Facebook Apple skirmish is the latest in a fight that stretched back more than a decade. In the latest iOS 14, whenever Facebook is tracking us, for example, when we copy and paste and move from one apps to the other. And if Facebook is tracking us, Apple will actually show a notification to say whether we want to disable or continue to allow Facebook to track us. To me, this is a problem that is larger compared to the antitrust issue. The reason is that Facebook business model is based on targeted ads. Targeted ads, it just means that the ads that we see as a user is actually personalized for us. In order to offer a personalized ads, Facebook has to track us very deeply in order to know our profile. So imagine that if most of the iPhone users just decided not to allow Facebook continue to track us, then Facebook will not able to continue to give this kind of targeted ads. Then this will actually hurt the ads business. But the tension between Facebook and Apple is not the first day. It has been ongoing for some time. So I think this is something they were able to sort out. The third risk that I would like to talk about is competition. For Facebook, I think everyone know about the ads. I think most of the young people also use Instagram, and basically everyone is on WhatsApp. But there's this new app that called TikTok that's actually quite engaging as well. I myself has tried TikTok, and I know that it is very addicting sometimes. You can just on the TikTok for hours and hours, and it becomes so engaging that it's quite hard for you to leave the platform. To me, this is also a challenge for Facebook. They actually come up with Reels, which is very similar to the TikTok. And so far, based on the user feedback, TikTok is still better. So I hope that Facebook will continue with their R&D and make their product better. Currently, TikTok is still not a public company. If they decided to go IPO, I will also consider to buy their shares. So this is the summary of all the pro and con for Facebook. I hope that it is helpful to you if you are considering to buy the shares. Let's move on to the next one. Let's talk about Alibaba company. So on Thursday, Alibaba shares just crashed by 13% on a single day. This is the most severe daily drop of the Alibaba shares since the IPO. And the reasons of the price drop is because the reports of anti-monopoly probe by China. The primary issue was a practice that forces merchants to choose one of the two platforms rather than being able to work with both. We will talk about the anti-monopoly probe later. Before that, let's jump into the company's background. So Alibaba is definitely the dominant e-commerce player in China. The chart that I'm showing on the screen here is the market shares of the e-commerce. The market share of Alibaba is close to 63%. Second largest player is JD, followed by Pinduoduo at 9.5%. And if we look at the fundamentals of Alibaba, the revenue growth was 30% year-on-year, and the core commerce revenue growth was 29% year-on-year. Alibaba Cloud is also growing very nicely at 60% year-on-year. And currently this segment is not making money at the moment, but there was report previously saying that Alibaba is expecting to see a profit from this segment not too far in the future. And if you look at the profitability and cash flow, the adjusted EBITDA is renminbi 41.2 billion and the non-GAAP free cash flow was renminbi 40.5 billion. Let's talk about the valuation. Similar to Facebook, the valuation for Alibaba is also very attractive. This is the source that I pull out from Yahoo Finance. The trailing PE is at 35 and forward PE is at 20.2. I think these numbers might not have captured the drop in the share price on Thursday. So if we consider that, the PE multiple is even lower. Next reason to own Alibaba is that this is a very innovative company, or at least this company tend to invest a lot of money into innovative companies. And I'm sure you have heard of this phrase before. For every services, people used to say there's an app for that, right? So there's an app for email, there's an app for search, there's an app for maps and so on. But in China, there's an Alibaba versions for anything that you ask for. So for example, Alipay is online payment, which is something like a PayPal. Aliyun is the cloud services, which is very similar to Amazon Web Services, and so on. I won't go into the details because I myself also not very familiar with all these services. Some of these services is only available in China. That's why it is normal that if we never heard of them before. So I have highlighted a couple of reasons why I like this company a lot, and definitely the antitrust issue is the highlight at the moment. In my opinion, right now it is still not very clear on what's the intentions of the Chinese government. I don't think Chinese government has the intention to kill off Alibaba just because of Ma Yun say something that they don't like. After all, Alibaba at this moment is already a too big to fail company. But the antitrust regulations that is going to be imposed by the government might have some fundamental impact to their business. For example, if Alibaba can't force the merchants to stay loyal to them, then some merchants will be able to sell in other platforms. So this might be a problem for Alibaba to stay dominant in the future. However, after the price drop, I do think that the current valuation and current price is very attractive. Hence, my plan is to buy more into the companies while the price is cheap. And one more point to add is that I'm very conscious about the over concentration in single company, because all these things we can only guess what is the potential outcome. So I can't 100% sure that the price drop will only be temporary, or I can't be sure that the price won't drop further from this point onwards. Hence, if I look at the allocations to Alibaba shares is already quite high in my portfolio, I will stop myself from investing more into this company. But right now, because the allocation is still not very high, so there's still room for me to add, I will continue to buy. So I hope this video is helpful to you. Please give a thumbs up if you like this video. This will help me to reach more audience, and see you in the next one. Bye.